Gold price is slightly lower, but of course still hanging in a pretty tight range here as we head into the FOMC meeting for Tuesday and Wednesday. Here to talk to me about it is Tom Vitiello. Tom, as always, good to have you here. What are you looking at with this trade right now?
Well, it's very Fed sensitive, so people are kind of waiting with bated breath. I think that every number kind of pushes gold in one direction or the other. People feeling that maybe they'll taper the taper if the numbers are bad. But I think if they're consistent and they pare back another 10 billion, I think people will feel a little more comfortable going forward that they won't be so data driven. I think if they shock people and maybe don't do anything or taper the taper, so to speak, it could be a little, it could add volatility to all the markets.
So what's your opinion on this? Should they stand firm and continue to taper the economic stimulus program, or would it make sense to pull back somewhat?
Well, I think it would show them to have some consistency and people will feel a little more comfortable. I think they'll add a lot of volatility to the market if they make some changes so abruptly because of maybe that bad employment number, or today the real estate, the number wasn't so great. But I think if they show that they're going to continue at this pace, people will get used to it, they'll settle in, and then they'll trade accordingly. People will know what's coming. I think they'll add volatility if they change on that path.
And finally, just because the Federal Reserve continues to pull back economic stimulus program doesn't necessarily mean that every time they make an announcement, gold takes a huge plunge. Is that right?
No, right now gold is being a little news driven. I think at the beginning of the year you had some short covering, and then now subsequently since then there's been some new longs added to the market. People may be taking a shot because gold was down so much last year. But I think right now the physical demand is very price sensitive. As the market goes up, the physical demand pulls back. As it goes down, they step back in. So we're caught, there's a little less volatility in gold right now. I think it's back to the old physical market that we used to have maybe years ago before the ETF influence.
All right, Tom Vitiello, as always, thanks so much. With Tom Vitiello at the NYMEX for The Street, I'm Joe Doe.